Billions of dollars of U.S. public funds might be tied to TikTok owner ByteDance, according to a report. We'll tell you more coming up on Business Matters. Good afternoon, and thank you so much for being here with me today. I'm your host, Don Ma. To start off, we're going to markets. U.S. indexes advanced today. New jobless claims data may have contributed to the upward momentum here. Some investors, of course, hoping a softening labor market could potentially lead the Fed to cutting interest rates this year. Meanwhile, central bank policy actually has been the main driver of investor sentiment in 2024. Renewed hopes for upcoming rate cuts have pushed the Dow higher for the last 7 sessions here. As well, declining treasury yields also supported stocks because, higher rates offer investors less risk while also making borrowing to fuel growth more expensive. And for the first time, a whistleblower from a Boeing supplier is speaking out. In an exclusive interview, Santiago Paredes told CBS News that Boeing knew it was getting defective fuselages.
This is a recipe for disaster, really. I said it was just a matter of time before something bad happened. Knowing what I know about the 737, it makes me very uncomfortable when I fly in one of them.
Paredes said he was in charge of final inspections at Spirit Aerosystems, and he said that he would find dozens of issues a day and frequently found problems near the same door panel that blew out during a flight in January. He said managers pressured him to speed up production and that he was actually punished when he pushed back against that. Paredes resigned in the summer of 2022 and is named as Employee 1 in a lawsuit against Spirit alleging widespread quality failures, which Paredes says Boeing knew about. Spirit said in a statement to CBS that the lawsuit is unfounded and it is committed to improving safety standards. Boeing says it has been inspecting each Spirit fuselages and fixing defects during its assembly. And the streaming unit at Warner Brothers Discovery is the bright spot of the quarter. It added 2 million subscribers and core profits jumped to $86 million. Warner Bros. Discovery has teamed up with Disney to offer a bundle starting this summer. And what that bundle is, it's going to include Disney Plus, Hulu, and Max. This comes as Warner Brothers is hopeful to reach a deal with the NBA as well, which is considered central to growing its streaming business and keeping cable customers. A couple more earnings today. Strong quarterly performance for Airbnb, but it was overshadowed by its weak forecasts for the second quarter. This stoked investor fears about growth slowing at the vacation rental firm. Forecasts were affected by the Easter holiday happening in the first quarter this year and currency exchange impacts. Now, according to analysts, Airbnb's forecast implies nights booked in the second quarter will be around 125 to 127 million. All right, we're going to cover some China-related stories now. U.S. investors may have exposure to TikTok parent ByteDance in the billions of dollars here. So how do they get involved and what's at stake? NTD's John Marshall has more.
U.S. money invested in TikTok? A new report says a number of U.S. pensions, university endowments, and other institutional investors may have exposure to TikTok's owner ByteDance. This is from a new report by a bipartisan advocacy organization, Future Union. The report lists the involvement of some of the most notable public pension funds and university endowments, along with how much exposure they have to funds tied to ByteDance or TikTok. Andrew King is a venture capitalist and the author of the report.
And that's what we're calling out in this report is they've invested with funds. Those funds have chosen to invest in China or companies like ByteDance.
The report states that the total amount of identifiable exposure is over $9 billion.
The middleman is the venture capital, private equity, hedge fund, whoever's in the middle that makes the investment decisions. The source of that capital is the U.S. pension funds, university endowments. These are not dollars that the pension funds and endowments and foundations and nonprofits have put into ByteDance. This is that secondary process.
To get an idea of how widespread the investments are across the United States, here are the states with public pensions invested in funds tied to ByteDance/TikTok investments. The states with university endowments invested in funds tied to ByteDance TikTok investments. States with at least one public pension invested in funds with direct connections to ByteDance. And states with at least one university endowment investing in funds with direct ties to investments in ByteDance. King says since funds and endowments don't have to disclose all the details of their investments.
So this is the best information that we can get from numerous private and public sources, short of having being privy to the actual details of what they're investing in, which is all proprietary and private.
He says there's much more information needed to accurately assess the situation and how much is at risk. TikTok just this week sued the U.S. government to block a new law requiring either ByteDance to sell the app or be removed from the app stores in the U.S. Billions could get stuck in limbo and tied to the outcome of how that plays out.
What we'd like to see is those pension funds endowments to make public the investments in China.
King said he hopes to use this nonprofit to catalyze the private sector to make a difference and take a stand against autocratic countries, China for the most part. Sean Marshall, NTD News.
All right, thanks for that report, Sean. Staying with China, though, Huawei's latest high-end phone features more Chinese suppliers than ever before, apparently, according to Reuters. This includes a new flash memory storage chip and an improved processor, highlighting the progress China is making actually towards technological self-sufficiency. Online tech repair company iFixit and consultancy Tech Search International dissected Huawei's P70 Pro phone. They found parts likely packaged by the Chinese giant's in-house chip unit, HiSilicon. And these findings have not been previously reported. Some memory chips for earlier models had been made by South Korea's SK Hynix. A Chinese invasion of Taiwan and seizure of chips producer TSMC would be, quote, absolutely devastating to the American economy. That's how U.S. Commerce Secretary Gina Raimondo described the impact if it were to happen. She was questioned during a U.S. House hearing. She declined to comment on how or if it will happen. But Raimondo noted that the U.S. buys 92% of its chips from TSMC in Taiwan. As well, the chip maker is investing $65 billion to its semiconductor production in Arizona. By the way, TSMC is the world's largest contract chip maker and a major supplier to Apple and NVIDIA. And as the Biden administration works to protect U.S.-developed artificial intelligence technology, China, on the other hand, is also pushing to develop its own. A large number of Chinese tech companies have been working to develop their own completely proprietary AI models. This includes Baidu, Huawei, and as well as iFlytek. Some of them claim that their models are as capable as OpenAI's latest GPT-4 model in several areas. And sources are saying that the U.S. Commerce Department is working to keep closed source AI models under wraps. But open source models, on the other hand, fall outside of export controls. Germany has a new top trading partner, and that is the U.S., because China has lost the spot to the United States for the first quarter of this year. And this is according to Reuters calculations. China has been Germany's top trading partner for 8 years in a row previously, but data from the German Statistics Office shows combined imports and exports between the U.S. is higher than China. So $68 billion for the U.S. and about $64 billion for China. And Germany also, as well, recently saying that it wants to reduce exposure to China over political differences. Now, here's the question. Is the U.S. labor market cooling off? Well, the number of people applying for jobless benefits for the first time rose to the highest level in over 8 months. And this is according to a fresh government data point report today. So weekless jobless claims rose to 231,000 last week. This is the highest level since last August. And the weekly Labor Department report is considered the most timely data on the health of the economy. Now, one economist is saying that the data indicates companies might be more cautious as they weigh the outlook for the second half of the year. Meanwhile, continuing claims also increased about 17,000 from the week before. And this is the number of people who have filed for unemployment for at least 1 week. To find out more about this, if it means actually a slowdown in the labor market, I spoke to Mark Hamrick. He's the senior economic analyst at bankrate.com. Here's what he said. So Mark, thank you so much for your time today. Weekly jobless claims, highest in 8 months. So usually I don't really cover these because they come so often on a weekly basis. But other things that I've seen as well, for example, the recently released job numbers, under expectations, unemployment rate ticked up just a tiny bit, and don't forget about GDP, right? Also coming in a little bit on the lower side, some would argue. I mean, all these things factored in together. Now, you tell me here, Mark, am I looking too deeply into this?
Well, I think you're on track, Don, with the sense that we want to have a better idea about what is trending with the U.S. economy. And obviously, there are many, many data points to watch. When you see jobless claims edge up to the highest level since last August, that's definitely eye-popping. However, these numbers over the last few years have been remarkably well behaved, have been historically low, and that's been consistent with a job market that's been more resilient and robust than would have been expected. We did see outsized gains in two places, in the states of California and New York. So we'll be watching these numbers perhaps even a little more closely in the weeks to come to see whether this is a trend or whether it's just noise.
Do you have any gut feeling at all as to whether the labor market is cooling off? What are your thoughts here?
The data shows us that hiring is moderating. Federal Reserve Chairman Jerome Powell says the supply and demand of labor are both coming into better balance. And those had been knocked out of balance by the pandemic and the great reopening of essentially the global economy, which occurred as sort of the golf equivalent of a shotgun start, something that happened very rapidly just as the shutdowns had happened very quickly. And so it is ultimately a good thing if the labor market is coming into better balance, because that means that there will be less in the way of inflation pressure. But yet, with the unemployment rate having been below 4% for more than 2 years, the longest stretch since the 1960s, it's still, broadly speaking, a good time to be a worker, whether one is looking to maintain job security or whether someone is looking for work.
Should we take this as a potential hint at all that it's a crack showing within the labor market? Your thoughts on that?
The latest snapshot, including an increase in new jobless claims, does not set off alarm bells, but it does say you better watch this space over the intermediate term because we saw a huge increase. We know from the early days of the pandemic, when we were talking about new jobless claims being in the millions per week, rather than an increase that's in the low 200,000 range, that this is as close to a real-time indicator with respect to the job market as anything that we have. And so it does bear watching, but right now we're not ready to call 5-alarm fire with respect to what we're seeing.
All right, very good today. Mark Hamrick, bankrate.com. Thank you.
Thank you, Don.
Also today, the chair of the Federal Deposit Insurance Corporation, Martin Grumberg, facing calls from lawmakers to resign. And this is after a scathing 234-page report released this week about pervasive sexual harassment, discrimination, and bullying at the agency. So the report, which was commissioned by the FDIC, confirmed the findings of a November Wall Street Journal investigation, which revealed a long-standing problematic culture. So the report was based on interviews with over 500 employees. It did not find that Grumberg alone was responsible for the issues. Now, if Grumberg steps down, there could be significant ramifications for banks across the country. Okay, taking a short break now, a controversial rule by the Securities and Exchange Commission that may have significant impact on the banking and crypto industry. We speak to the congressman seeking to overturn that rule. As well, Americans saying that right now, worst time to buy a home according to a recent survey. We have that and more after the break. Don't go away. Welcome back and thank you for staying with me here. Some quick headlines I want to go through with you. Hospital operator Ascension is warning of a suspected cyber attack. It reported disruptions to its clinical operations due to the cyber security incident, suspected that is. It's advising partners to temporarily disconnect from its systems. Ascension's network includes 140 hospitals and 40 senior living facilities in 19 states. And the U.S. Treasury Department is partnering with Wall Street to defend banks against hackers. The alliance, dubbed Project Fortress, includes protective measures to defend against hackers, and banks can opt into this free feature, which will automatically scan their systems for vulnerabilities. As well, activist investor Encore Holdings won 3 board seats at one of America's major freight railroads, Norfolk Southern, but fell short of ousting the CEO. And the Bank of England moves closer to first rate cut since 2020. A second official is now in favor of cutting rates at the Bank of England. It was a 7-2 vote, this time to keep rates at the 16-year high of 5.25%. Meanwhile, lawmakers here in the U.S. at the House of Representatives has voted to repeal a controversial rule by the Securities and Exchange Commission. The rule relates to how banks handle digital assets like cryptocurrencies. It requires custodians of digital assets to account for them as a liability on their balance sheets. So the SEC says the policy is to protect investors, but on the other hand, critics are saying, from crypto businesses as well as big banks, they argue it would significantly raise the cost for banks to hold crypto for customers. Republican Congressman Mike Flood originally introduced the House resolution to overturn the SEC rule. We caught up with him earlier. Take a look. Congressman Flood, thank you very much for your time today. So I'm glad to hear that your resolution passed for SAB 121. To start off, maybe you can just explain for us as simply as you can so that our viewers, some may not be familiar with this. What is Staff Accounting Bulletin 121?
Well, it's supposed to be, staff accounting bulletins are supposed to be non-controversial, but the SEC really violated the entire rulemaking process when they essentially said that publicly traded banks and broker-dealers have to show any digital assets in their custody on their balance sheet. That's not how custody works. Custody is holding an asset for the benefit of another, and that's what banks traditionally do. This guidance overstepped all the boundaries because the SEC did not get any input back from the prudential regulators. And so they made it virtually impossible for some of the largest and most regulated banks in the United States to take custody of any digital assets, including cryptocurrency.
And let's elaborate on that point a bit. You said that the Biden administration is taking shortcuts around the public rulemaking process. What do you mean by that?
Well, staff accounting bulletins are really non-controversial accounting guidance for CPAs and others in the United States. There is a rulemaking process that the SEC could go through if it wanted to do something like this, but it chose this non-controversial path and put a very controversial rule in there. And I think it surprised everybody at the SEC when the Government Accounting Office, the GAO, essentially came out and said, wait a second, what the SEC did here is a rule for purposes of the Congressional Review Act, meaning that Congress can strike this down because this is a substantive policy change subject to the CRA. And so when that happened, not only do I have a bill, but I have a bipartisan resolution that essentially strikes this down that I sponsored with Congressman Wiley Nickel, a Democrat out of North Carolina. And I'm pleased to say that last night on the floor of the U.S. House, not only did every Republican vote for this, but over 21 Democrats voted to buck their own party. And this is after President Biden said he would veto this if it got to his desk.
And also, can you talk a little bit about, you also said that SAB 121 is a regulatory overreach. Can we talk a little bit on that?
Well, at the end of the day, when you do something and you commit a process foul by not allowing anybody to have any public input, not even the prudential regulators were allowed to weigh in on this. They were not consulted. They basically testified to that. And then when you completely route around the entire public and put this out, in 2022 without following any of the rulemaking Administrative Procedure Act guidelines, and you skirt the law, no one should be surprised when Congress exercises its Article 1 authority to say, no, not today, we're not doing this. The House has spoken loudly, and President Biden should sit back in his chair and ask himself, why are we dealing with issues like this? Why is one of my agencies completely going around the rulemaking process to use staff accounting guidance as a way to implement major policy decisions?
Gary Gensler has been defending this for a while now, and I want your response to one thing that he said. So he's arguing that custody in crypto often means that the public no longer has ownership of their cryptocurrency. So if the crypto exchange, for example, goes bankrupt, then customers or investors basically are just waiting in line in bankruptcy court. What do you say?
Well, that's what happens when you don't let our nation's largest banks provide services in this space. That's what happens when FTX goes to the Bahamas. I think it's ironic that Chairman Gensler uses FTX as an excuse for keeping the largest banks out of this. If anybody, banks that have been around for 240 years and custody trillions of dollars of assets, they understand custody better than some offshore account with a bunch of folks that are never regulated. I'd rather do business with a bank that has regulators in there all the time checking its safety and soundness. And quite frankly, most Americans do.
Incredible. Very well said here, Congressman Flood. Thank you very much for your time.
Have a good day. Thank you.
And one more thing I want to bring your attention to today is Americans apparently remain gloomy about the housing market. According to a new Gallup survey, just 21% say it's actually a good time to buy a house. And that is tied with last year for the worst reading in Gallup history. Meanwhile, 76% say it's a bad time to buy a house, and that's just below last year's record of 78%. And these findings reflecting the affordability issue in the housing market. Young Americans looking to buy a home are facing record high prices and painfully high mortgage rates. All right, that's it for today. All the stories we have. Thank you very much for watching. And if you have any feedback for the episode, please feel free to let me know. You can email us at business@ntd.com or just simply leave a comment online. I do read them for every episode. And one more thing I always say, business matters. See you tomorrow.